Welcome to the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us live. This is, by the way, once every quarter, it always seems to happen on a Wednesday that we're like real journalists and we get to report live NVIDIA earnings.
No, we're
so
not.
Again, we're not real journalists. Just, are you kidding me? It's just no. But I did write in the newsletter, the unfilteredinvestor.com newsletter last weekend, that I thought the price action in the NASDAQ, and what I'm referring to is it following Bitcoin and cryptocurrencies lower, which I believe was a real thing. And if you look at charts, it matches up. Like about a couple hours earlier, Bitcoin would drop and then the NASDAQ followed it. So I thought that meant the situation might be stretched. The AI trade might be stretched. I'm not, I call it a bubble sometimes, but for this exercise, I will not. If NVIDIA beats and their stock price gets hammered, do you think it's a serious breather time in the NASDAQ?
I already think it sort of is.
Yes,
the NASDAQ today, looking at the futures, failed at its 50-day moving average. Now, obviously, the 50-day moving average came around, again, futures talk, about 25,008.
Right.
And it failed up against there. The high today, I believe, was like 24,000 and change. It was like 24,988, somewhere around there. And so I think it's already kind of done that. It's a long way to the 200.
16% from the high in the NASDAQ.
Yeah,
that's a long ass way.
That's the entry of a bear market. But I don't think we're going to do that. I just think we're overextended for what's going on. Valuations. Some people think AI is a bubble. I might be in that camp. We've got other things going on. The shutdown is going to delay things. But in the long run, it's going to be a buying opportunity. It's just going to end up that way.
I agree. Okay, now guys know what I always say at this point in time. I'm going to say it again too. You may follow and listen to Bobby and I for 20 years and think that we're often full of shit. Sometimes we think we're often full of shit. But one thing you cannot deny is, for some odd reason, outstanding guests say yes to us and come on. And today is no exception. One of our favorite people, I'd like to bring in the president and founder of Macro Mavens, Steph Pomboy, our friend. Okay, first question we got to ask, because this goes to your credibility and goes to how much you know about other people's cultures. What does that W mean? Do you know?
Oh, dear God.
You don't know, do you? Gosh, I hate you so much right now.
Oh, my God. No, I have no idea.
Like when the Cubs win for the last 100 years, they put the huge W flag so the people on the L driving by, flying by, can see the W, know the Cubs won. It started decades and decades ago. Have you spent any time in the lovely city of Chicago?
I haven't. I have not.
You should.
Now's not the time to do it. I'll tell you that.
Yeah, no. I definitely wouldn't be coming anytime in the next several months. That's
right. Yeah, no, it's mid-June through mid-August.
I meant the last few years stuff,
October,
but yeah, winter, that too.
Yeah. Oh, yeah. He was talking about dodging bullets. Yeah. The blue line is how I get to work. And I wrote a whole thing on it on Twitter about it's a traveling homeless encampment. And just 2 days ago, someone lit fire to a woman, doused her in gas, and lit fire to her on my train. I wasn't on the train. I don't take it anymore. And by the way, that was like the least surprising thing I'd read all day. That is the blue line. The Chicago is totally messed up. You're coming to us from the mountains, right?
No, I am now back in sunny Florida.
Oh,
I'm a year-round summer girl, so I do winters at the beach and summers in the mountains.
Fantastic.
Why not?
We started spending more time in Florida, and then I took a gig coaching high school basketball with my niece. So that takes up the winter here. I'm gonna be freezing my ass off, Bobby.
Yeah,
Steph,
no, not for me.
Actually, since you're in Florida, I know you're actually, correct me if I'm wrong, you're not homestead in Florida, right?
No,
not full-time.
I'm homeless in Florida is what I
Yeah.
I sold my house and I'm renting. So
Well, I know that you go back and forth. So if there are state taxes, do you file them?
Oh yeah, no. I'm a Floridian. Yes, I thought you meant about homestead for my house.
Because I'm curious what you think, as a big picture person that you are, about the idea of getting rid of. I've been going back and forth with people on Twitter about getting rid of private property taxes in Florida and what that would mean. And I see, honestly, nothing but positives. But I'd be interested in you telling me I'm wrong if I am.
No, that was one of the reasons I sold my house. It was just between the property taxes and the insurance, it was just insane. So no, I think that would be a great thing. And I think Florida is probably one of the few states that could probably do it without wrecking havoc in its, in its finances. But that's probably an unusual thing. I don't think California could do it.
No, I mean, people talk, I'm sorry, Jim, people talk about it as if it's some sort of a giveaway to the boomers, but Florida, believe it or not, this was shocking when I found this out, is actually below the national average of the amount of homeowners that are over 55. Now it's 53.6%. It's still a majority of homeowners being over 55. But there was some guy saying to me, oh, you're just helping boomers. First of all, technically, I'm not a boomer. Got to continue to point that out. I'm 2 years younger than the boomers, but I don't give a shit about that. It's like looking at it from that perspective. Who do you think owns the other 46.4% of the homes? It helps everybody that owns homes, and that'll just bring in a larger influx of people to Florida, which I'm not necessarily for, but that'll boost up sales tax even more. So it's like one of those things that Jimmy, you talk about this all the time, about anytime taxes are cut, tax receipts go up.
From punitive levels.
For some reason, still don't get that.
Yeah. But also, there's places in Florida that I think are not packed like Bonita Springs and Naples are. Couldn't you go to like Crystal River or St. Augustine? Those places aren't jammed, are they?
Well, the area that James Fishback lives in and the area that Tom Luongo lives in, those are not packed at all. And also there's the people that have been in their homes for 10, 20, 30 years. Some of these homes are multi-generational. They get booted because they can't afford the property taxes when they get reassessed. And they can't afford an attorney to fight the reassessment. This takes care of that. So there's actually a lot of lower income individuals that would be helped by something like this.
So you guys who are listening to us shoot the shit, where we were just kind of buying time for the NVIDIA earnings, but let's move on without them. Steph, you heard what I said before. I thought the NASDAQ following Bitcoin lower was a sign of severe stretch, and maybe that we need to trade back down to the 200-day moving average, which is 16% off highs in the NASDAQ. Can you speak to that?
Well, you guys are much more involved on the technical, the moving averages and where we're sitting relative to that. But I would just say broadly, I agreed with Bob's response to that, which was, I think we've seen the crack already. And it's not, when I look at it from a macro perspective, it really starts with what we got. Sorry, she had to say hello.
What do you mean? The dog's always welcome in the shot. For you people who are just listening, one of the beautiful bulldogs, you have one or two?
One.
Okay. A beautiful bulldog just walked into the shot, which she's always welcome.
Yeah. Well, she's always going to make herself quite welcome. Anyway, I think, what we were seeing on the credit side is really, what's causing a lot of this. I mean, I know that there's a focus on NVIDIA earnings, et cetera, but the likelihood that people would give them a pass if they came in at exactly expectation or something would have been higher had we not been spotting cockroaches in the credit market. Can
you walk us through what you saw in the credit market that suggested structural weakness?
Well, first off, I mean, forever we've known that private credit was a debacle and that it was marked to myth, and that, a lot of these companies obviously weren't worth the price that they were being marked at. And we knew that because while private credit was booming, the parade of corporate bankruptcy filings came in at the fastest pace since COVID and the Great Recession before that. So there's no way that you have conventional companies filing bankruptcy, but the private credit stuff is all pristine and fabulous, where they're doing no due diligence whatsoever. And of course, we found that out. So we, Tricolor, First Brands, all this stuff.
Oh, yeah, that's what you're referring to. I got it. Yeah.
And then Diamond, of course, talking about, there's never one cockroach. And I have described him. I think that Diamond is,
if a cockroach?
No, I'm not going to get personal, but I'm going to use a Seinfeld analogy, and I'm going to say that Jamie Dimon is the bizarro Chuck Prince of this cycle. So Chuck Prince wanted to keep dancing until the music stopped, and I think Jamie Dimon is saying, there's never more than one cockroach, and I'm seeing cockroaches, so it's time to kind of slink toward the exit. So I'm calling him the bizarro Chuck Prince. And I think that all, all those things are now starting to create a little bit more discernment, as it were, in the markets, both credit and equity. Now you're seeing articles about, hey, maybe there's overinvestment in AI. Maybe some of these are, circular investments. And in the credit space, hey, maybe some of the ratings aren't high quality. You've got Egan-Jones being investigated by the SEC for their ratings. And so there's a little bit more scrutiny about what exactly are these companies worth. And whenever you do that, after a decade of lending money to people at 0%, out of desperation, you're likely to find a lot of ugly stuff when you start digging. So I think we're at an inflection point with that. And if so, I don't see how the stock market, and especially the tech stocks that have been leading the move, escape unscathed.
Steph, part of the reason that I think this is a buying opportunity as much as any of the other sell-offs, and one of the things that, by the way, to both of you guys, one of the things I'll be looking for today.
Hold it, Bobby. You don't mean a buying opportunity yet, correct?
No, not yet. Not
right,
yet.
yeah.
But I will say that.
Wrong? I thought you said that you were.
No. I think it's going quite a bit lower, and then that will be a buying opportunity. I don't want to put a number on it. Well, that's a lie. If I were going to be looking for somewhere, again, I'll use NASDAQ futures as the baseline. I'd say about 22,900 is about where we're going. Right around in that range, maybe 23,000, but I don't have a measured move target on it, but that's kind of where I'm looking at. And one of the things that I keep looking at, basis this stuff, is NVIDIA today, for example. Okay. I don't remember what options said in terms of the direction of the move that's expected 7 minutes from now. But I will say this, that when you have a $4.4 trillion market cap company, it can do a lot of damage over the next couple of days. And by that, I mean to the sell-off. So let's say NVIDIA does something that the market likes. When you have sell-offs like this, there's always a bunch of people who haven't sold yet. And if NVIDIA gets the NASDAQ to rally 2, 3, 4%, and then it starts selling off, look out. I mean, that can get really, really ugly. And by ugly, I mean, again, 22,900 or so. Do you see anything in that analysis that's wrong? Or
well, no, to that point, I was just going to say, I'm sure you saw the B of A fund manager survey that just came out, where they talked about the fund managers were now very concerned that there had been overinvestment in AI and, thinking maybe this thing had jumped the shark. So there was a huge increase in that. And yet in the same survey, their cash positions are at almost all-time record lows. So, like you're saying, Bob, these people haven't really sold yet. And so they're waiting. I agree with that. I think there's probably a lot of money waiting to see that could pull the trigger.
So here you mentioned problems in credit markets. And I think that, again, when we start to see stress, it usually always shows up in interbank lending first or so what chart do you have? What indicator do you have up that you look at every day to say to yourself, is it happening? Is it all beginning? What do you think is the best way to look?
Well, the hard thing is that the weakest link in the chain is private credit, and there's complete opacity there. So you can't.
That's why I hate it so much. Right. That's why I'm asking this question.
Right. So, but you can look at the stock prices of Ares, KKR, Apollo, BlackRock, all those firms that are exposed. But what I've been looking at is trying to look at the appetite to buy more paper. So I'm looking at the league tables and specifically levered loan issuance, because that's sort of the easiest thing to look at that you can watch on a daily basis. That kind of you can probably extrapolate what's happening in levered loan is probably happening tenfold in the private credit area. And so levered loan issuance had been, going full bore. And then we got to November with the cockroach sightings. And so far this November is the slowest November for issuance since at least 2014. That's as far back as it. So you're going, and you'll recall in 2014-15 was when we had the last corporate credit bust. You had a massive spike in spreads and yields. And it was really kind of a hangover from the energy bubble bust that happened in 2013, 2014. So that was the last major corporate credit bust. So when we're looking at the weakest levered loan issuance since that period, or it's actually worse than that period, people are starting to become risk averse. And if maybe it's just a temporary thing, maybe we'll have a Santa Claus rally and December will be great and they'll be, opening the doors and lending money like sluts all over again. I don't know. But right now, this is different.
Way to wind that in. That was a good one. Anyway, let's, so here's my question then. People who have been around a while, every time we start to say this clouds are gathering, people think in terms of 2001 and 2007, 2008. I think there's big differences. When the problem was real estate and the problem was every stripper owned 5 homes on speculative basis, which actually was really the story, that works
What's
itself
with the
out.
Sluts and the strippers.
Sluts and strippers. Tune in our show. It's ratings week. So we're going to talk sluts and strippers on.
Exactly.
So my point is that everybody like us thinks in terms of, oh, is this the big one? And it's never really the big one, except for those 2 times when it was the big one. Do you see enough of levered up in anything that could just drop the absolute bottom out of it and create like a, absolute destruction of the economy in general and the markets to follow?
Oh my God. Well, I mean, if the stock market reverted to anything resembling normal valuations, it would be worse than 2008.
Okay, so tell me this. So do you think I've been arguing this for a long time, and then I'll let Bobby have the next question. But I've been arguing that 60% of the non-asset holders are shit out of luck. All they got is higher grocery bills. The 30% of us who own the assets have been inflated through the roof, and we're spending money like drunken sailors who became politicians. That's just too long a thing. But anyway, so if we destroy the price of the stock market, everything just dries up. All the spending just dries up, right?
Absolutely. I mean, the stock market is the tail wagging the economic dog right now, but it's more than that because it also is a huge impact on the budget deficit. You not only you get tax receipts, you get capital gains tax receipts and everything, cyclically, if the economy goes into a recession as a result of a reverse wealth effect, that budget deficit's going to blow out. I mean, after 2001 and 2008, you saw a doubling in the deficit. So from where we are now, it would be absolutely devastating, which is why I'm so bullish on gold. I'll jump to my conclusion because there's no way to get out of a deficit like that other than having the Fed come in and absorb all the issuance. So there's just with the numbers as big as they are now, there's no way to kind of muddle through another recession of that kind of magnitude. But I do think that the stock market, we're talking about a massive haircut if the stock market were to revert to normal valuations. I mean, it should be 50, 60% lower than it is right now. And that's
Bobby, can you hit us with a drum roll?
Yeah.
It's all happening.
It's here.
It's here. We've arrived. It's 4:20 New York time, 3:20. First move, and I'm not looking at the earnings themselves. I'm just looking at the stock. It's jumped 2% in the last 10 seconds. So my guess, the knee jerk is higher, which by the way, the knee jerk being higher means shit. Now it's up over 2%. Bobby, do you see any of the numbers coming out scrolling or you, Steph?
Yeah, I've got,
look at us, Steph. We're like real big boy journalists now, breaking stories. It's what we do.
I'm not seeing it.
I'm useless because I had to close my Bloomberg to be able to do this because my Wi-Fi connection's so bad. So
I closed my Bloomberg 20 minutes ago because I didn't want anyone trying to contact me. And then I realized, oh shit, I don't have my Bloomberg up. Yeah, I have another site up.
Okay, I'm not seeing it, but I am seeing a NASDAQ futures rally.
So 3% rally in NVIDIA itself. It's trading at 192.88 right now in the aftermarket and rallying 3.5% higher. So, they did something good. Polymarket had it as a 92% chance that they beat. And remember, for you people watching, what we were looking at again, and this is going to take 2 hours, 2 days to figure out what the effect's going to be. Yeah, because this means nothing to me. The initial wake. If we turn it around in the next couple of days, I'll say, oh shit, this could be not the end, but you guys know what I mean.
All right, adjusted EPS $1.30. That's what I'm seeing up here. I don't know. Oh, I do know what the estimate was. Hang on a second. I can find the estimate in a separate screen.
So for the people who are watching, maybe we're not totally big boy journalist.
Well, the ironic thing is that we're sitting here at the NVIDIA announcement with the ultimate Luddite as your guest.
Generational Luddites.
So it was 130 versus 125 and a half estimate, revenue 73. I'm sorry, they missed on revenue.
Okay, so
Looks
why
like
are
it was
they being
51 and
punished? I thought they would have
change, and it was estimated at 54.91 billion. It was 51 billion.
No, they beat on revenue, 2.5 billion versus 2.4.
Oh, it's 65. Yeah, 65 billion plus or minus 2%. It's estimate was 62.
Yeah, so it looks
All
to me
right,
like
I don't give a shit about that. Here's what I want to ask.
Good.
Actually, I want to go to a couple of viewer questions beforehand. So let's see. Yeah, Remo says it beat revenue and beat EPS. Remo asked, did you catch Jeffrey Gundlach on with Charles Payne today? I didn't. So if either of you did, can you fill me in and then give Remo your thoughts?
No, but I think what he said, both Jeffrey Gundlach, Ken Griffin, and JP Morgan within the last month have been talking about gold like we have. So I didn't hear what he said. So my assumption is he's been beating that drum. Jeff Gundlach has. Steph, make your case for gold. Let's just make the assumption that that's what he was saying. Because Bobby and we've been accused of being gold bugs for 5 years.
Steph saw it. Steph saw it.
Oh,
yeah,
you did?
I didn't see this, but I saw Jeff Gundlach yesterday on garbage loans, and he was talking about private credit and all that.
Oh,
so
okay.
I think he and I are very much on the same wavelength in terms of the outlook, both for credit and then for gold. But my view for gold is just basically what I stated earlier, is that whether we have a recession or not, I don't see how there's any way for us to finance these deficits without the Federal Reserve eventually expanding its balance sheet. They did this neat little trick at the last FOMC where they announced that they're going to stop the runoff of the balance sheet, but they're stopping the runoff for treasuries. They're going to continue to run off their mortgage-backed securities. And what they're going to do with the proceeds of those mortgage-backed securities is recycle them in T-bills.
That's quantitative easing. Sorry.
Right. But what I thought was surprising is, when Bessent was on the campaign trail with Trump, kind of grooming himself to become the Treasury Secretary, he was denouncing Janet Yellen's program of financing the deficit with T-bills.
Yeah.
And then he got into the job and realized, shit, I'm screwed.
The only option, right?
There's no other option. And so here's the Fed now going to absorb that front end issuance by taking the maturing MBS and recycling that into T-bills, which is fine for the time being. But I think it's just a matter of time before the Fed has to expand its balance sheet and start buying across the entire curve. Because since September 17th, when the Fed first cut rates, no interest rates have come down other than the Fed funds rate. The 10-year yield is exactly where it was on September 17th, maybe even 2 or 3 basis points higher than it was then. And corporate yields, same thing, credit card debt, mortgage rates, whatever. So there's no relief coming from monetary easing right now. So they're going to have to give up on pulling the Fed funds lever because it's broken and start enlisting the balance sheet to do what the Fed funds rate can't. And I think that's what gold is sniffing out already. If you overlay gold with the Fed's balance sheet, it leads it. I know that people think this is ridiculous, but it leads it by like a year to a year and a half. Gold is a long leading indicator, and it's anticipating the next big expansion in the Fed's balance sheet. So that's why I own it. I think there's no way out. And I look at these, a foreign central bank dollar recycling or lack thereof. We got another TIC report yesterday, and it showed further central bank selling paced by India this time. So we've got a big hole to fill, and there's only one entity that has the capacity to fill it.
Yep.
I want to throw up another question from Widge, and it's interesting based on what you just said. As Widge says, can we judge where we are in the markets by the number of people that go on financial media to tell us it is not a bubble? This is the only financial media you should watch, Widge, is this kind of media, not just us, but this kind of media. And the reason I say that is because everybody that goes on your CNBCs and all that other crap, they own the thing. Just now,
Right.
Jensen Huang's quote was up there saying that he gave really good guidance proving it's not a bubble. That okay. I'm 6'2". Prove me wrong right this second. It's just not.
Guidance,
It's stupid.
right.
Go ahead, Steph.
Yeah, no, I totally agree. I guess I'm refreshed with that question because normally I get this pushback that I'm a perma bear and I'm always negative and I always decry everything as a bubble when it's not. And I'm going to issue a self-defense, even though no one required me to do it. And that is, I've been touting gold relative to being invested in what I thought was an overvalued stock market. And everyone says, well, you missed out on the stock market rally without paying attention to what gold's done. And if you look at gold, it has massively outperformed the stock market. And the gold miners have outperformed NVIDIA. So tell me where I've screwed up here, people, because I feel like, yeah, okay, I didn't buy stocks. But had you listened to me and done what I suggested, I could have called the stock market a bubble, and you might think it's wrong. I may just say it's still inflating, but it's still a bubble. And, you're better served to protect yourself with the hard assets. So
time out. Luis, can you put the banner up? This is the time in the show where I run the commercial for our sponsors and our friends at Tradier. Tradier Pro is an options trading and options analysis platform that we've talked to people who've been trading options for decades and those who are new to the game, and they all love it. They all say it is of incredible value. And the good news is you guys can get it for 3 months for free. All I have to do is scan that code. There is no obligations at all. Do it because you're interested in the platform, or do it as a favor to us to support us in the show. We appreciate it very much. Thank you guys for watching. Thank you guys for supporting us. And now back to the show. Bobby.
I have a question, but I think I want to put up Widge's comment first because Widge is giving, I think, too much intellectual credit to the Fed. Widge says, I think recycling MBS into treasuries explains why the Fed stockpiled such an MBS portfolio in the first place. They wanted that piggy bank to later fund the treasury. That is giving them too much intellectual.
Which you would have done that because you're smart. There's no way they did that.
What do you think, Steph?
No, and also I think it's the crazy thing is that they're running off the MBS and not the treasuries, because if you believed what the administration has said, and Besant, every time he gets in front of the camera, underscores that it's Main Street's turn. We're done bailing out Wall Street. We're here to help Main Street. And now they're going to really put the screws to Main Street by making, the mortgage market even tighter than it already is. Those rates aren't coming down. They're going to go up. So, and we'll see, how much pressure that puts on prices. So that,
Widge, by the way, I wasn't trying to, not you know, I usually agree with you. I think you are so smart that sometimes you're thinking other people are that smart too. And I do not believe they are Widge intellect. By the way, our audience members, Steph, come at us with questions that are so involved and deep and complex. It's like, holy shit, who are you people?
I love it. But you're so right. You should never underestimate the stupidity of the members of the Federal Reserve. Never underestimate the stupidity of a bunch of guys with PhDs. And I don't call them monetary magoos for nothing. These guys couldn't see, the nose in front of their face.
I have a PhD, but what it stands for is filthy. So I'll save it for another conversation.
Okay, good.
Oh man, I'm gonna try to figure out what that could be.
You'll get it before the show's over. So I'm looking at. I'm not going to say that. I'm looking at predicted markets right now. Okay, and the reason I'm looking at it is for my next question. It's 77 cents. Yes, that SCOTUS will strike down Trump's tariffs. And it's 23 cents no. So the favored view is that SCOTUS will strike down the Trump tariffs.
What side is that on? Is that on Predicted?
It's on Predicted, yeah.
Okay, yeah.
And there was a 24% reduction in the deficit in the last data. Imports fell by 5.1%. Exports rose by just 0.1%, but it was still a shrinking of the deficit and larger than expected. Yeah. Do you think they'll strike it down, number one? And number two, what do you feel about tariffs at this stage? Because I think we talked to you last time we talked to you, and this is a sin, was I think last year or early this year.
Yeah.
So what do you think about where it's at now?
Well, first off, I can't hold forth on whether they will uphold it or not, because I'm not an attorney or a constitutional scholar. But I do think, initially, first off, I never thought tariffs were inflationary ever. My whole thing, nothing's inflationary if the consumer doesn't have the money with which to absorb it. So, you know, you can try to raise your prices all you want, but if consumers don't have the money to pay those higher prices, they're not going to do it. They're going to go shop somewhere else. So I never thought that was inflationary. And I guess my sense, therefore, was that it was a smart strategic tool. And my sense, as we've watched the last several months, is that the tariffs, you know, initially he billed them as a way to reshore production and really boost the U.S. economy and blue collar employment and all that kind of stuff. And my thinking about that has kind of shifted. And I think maybe this is the argument they'll make before the Supreme Court, is that this is much more about national security and geopolitics than it is the U.S. economy per se, because he has wielded that tariff cudgel as a means to create these deals with sort of antagonistic countries around the world and to broker peace accords and to basically shore up the national security interests of the United States, be they related to energy, resources, rare earth resources, whatever it is. He's using tariffs as a national security carrot and stick rather than necessarily to boost the economy. That's my sense. That's the number one priority.
Can I add something to that too? Because I get argued with all the time. Are like, oh, I thought you were, you know, a free trader. Well, of course we are. I'm a free trader. Free trade would be the optimal situation.
But they're tariffing us.
They're tariffing the shit out of us, manipulating their currencies. The manufacturing going to China and Southeast Asia, that should have taken like 40 years. Instead, it took 15 years because of what they did to accelerate it. We all of us are of the tree of, you know, Hayek and Friedman. We are not people. We are not crazy protectionists. But if you use it as a bat to get people to the table and it works, then more power to you. Yeah, people are not looking at it right. Yeah.
But you think the entire objective was to never actually have tariffs be a long-term thing? Like, they're going to throw out the threat. We're going to threaten you with tariffs, and you're going to retaliate, and we'll go back and forth and back and forth. And finally,
you know what they'll say then? They're like, well, then Trump comes on. He says he loves tariffs. Yeah, he says those things. Right? Okay, it's part of what he does.
Like, have you ever been in a negotiation?
You know, I'm perfectly fine with keeping them on forever, right? Yeah.
I want to play poker with these people because they just have no idea. Like,
it's really similar. My dad used to say to me all the time, I'm anti-violence, but don't touch my stuff.
Yeah. How about
you know, it's that kind of a thing. Of course, we're anti-tariffs,
right.
But it's ridiculous when you're not on an even playing field. It's just silly to take a stance like that. You can't be theoretical in a real world.
Yeah, absolutely.
Yeah, that's a good way to say it. Can we talk about some other? So here's my assumption. Let's go first. Hit banks. So based on what you said before, problems developing the credit markets, which I agree with you. There was a time where I thought, okay, maybe they're gonna ease on the short end and they're gonna steepen out the curve, and maybe banks will kind of like that if they tip their head and wink. There's no reason to buy banks in your mind right now.
Well, I thought you'd get a curve steepener as well, and that might help the banks. The problem is that the same argument was made going into the global financial crisis. And of course, if you have a credit bust, the losses are going to overwhelm any benefit from net interest margins. And now you've got the double whammy that while private credit has mushroomed in the space that would have been accomplished by the banks, were they not strangled by all the regulations, the banks are still connected to it because they're lending to all of the non-bank financial institutions that are making those loans. They've got, you know, $1 trillion plus in loans to non-bank financial institutions. And that number has absolutely exploded just in the last couple of years. So, you know, that lending is, you know, last in, first out. It's the crappiest crap that just got done, you know, as in the face of higher rates. So I think the banks this will all reverberate through the conventional banking system to the chagrin of everyone who insists that it won't.
Yeah, I got you, Bobby.
What do you think the next step for the Fed is then? Do you think they're actually going to, let me rephrase the question. Are they using the lack of data as an excuse to not cut right now? This is funny, by the way. It's time for Main Street. I assume Main Street is a new AI startup. Anyway, back to the question. Do you think that this is just an excuse for them to pause as we get into the holidays? Or you think they actually should cut or not? What's your whole view on that?
Well, I'm, getting back to Hayek, I'm one who doesn't think that the Federal Reserve should exist as an institution, and that they have basically proven that they do more harm than good at every turn. So they've already screwed it up. They never should have raised rates in 2022. They certainly shouldn't have cut rates in October of 24. So it's all, they can't, every time they make a turn, it's in the wrong direction. So, whether they cut, and again, getting back to what I said earlier, whether they cut rates in December or not is irrelevant. It's not going to affect interest rates anywhere on the planet, as we've seen so far. Nothing they've done.
Wait, okay, so let me interrupt you real quick for 1 second. So you're saying, and I think I agree with you 100%, but I hadn't been able to say it eloquently. I think you just did. They can cut rates till they're blue in the damn face, but what really is going to matter is what they're doing further out the curve with their purchases. That matters infinitely more than them cutting rates. Okay.
They're huffing and puffing, and they're not getting anywhere, because that long end, you talk about this concept of fiscal dominance, and we're looking at it. And you're seeing it in Japan, for example, where they just announced a stimulus program, and then the JGB market absolutely, exploded higher in yield. So, and that's coming to a theater near you here. We're seeing it already, where the reason that rate cuts aren't working is because we're now in a paradigm where the federal government isn't viewed as a safe asset anymore. They're fiscally irresponsible. Why are we going to lend them money at lower interest rates just because the Federal Reserve is tootling around with its little Fed funds lever? It doesn't change the calculus on the deficit. Nothing has improved to make the credit quality of the federal government better. So no, that borrowing cost isn't going to come lower, and therefore nothing tied to it is going to come lower either.
Okay, so both you guys who we talk to each other on Twitter, so you probably know what my biggest pet peeve is, and that's the fact that when you count in the fact that 41 states tax long-term capital gains as regular income, then realistically it's 20% capital gains tax and almost 30% capital gains tax for the highest earners. This to me seems like the low-hanging fruit to stimulate economy anytime it starts to slow down. I actually think it is what contributes to bubbles. I don't like to sell stock to take any sort of tax event ever. And I'd rather hedge it. I'd rather play with it. I think that if we made the capital gains tax around 6%, people would nimbly and efficiently get out of inflated assets and direct capital into the right places. What am I getting wrong? How big a deal is it that they're being stupid and dragging their feet on cutting capital gains?
Well, they can't afford to because they need the revenue. So,
okay. But don't you think that cutting back capital gains tax could encourage people to make more transactions in the short term, at least boost revenue?
I would agree with that, but you have to argue the Laffer curve argument to a bunch of people who, even though Art Laffer has been proven to be right time and time and time again, insist that it's a sop to the rich. I mean, you're going to encounter that argument, So
yeah, and I do.
Politically, it's a loser, and I'm sure that even Trump realizes that. But yeah, I mean, absolutely. And talk about this is the same concept as unearned income. Well, where the hell did the money come from that I invested in these assets? Like, yeah,
heavily. Yeah, yeah, Bobby.
So then, what is the? Okay, this is almost a political question. I almost hate to ask, but I want an economic answer. What's the solution to what everyone is saying is the affordability crisis? I know, from a typical supply dynamic side, what the answer is.
Right.
From a political side, is it literally it's obviously more supply, but
is it talking about housing or in everything?
What's that?
In housing specifically you're talking about or no?
No, I'm talking about, food and all that has gone down, but not as far as people wanted to see. I'm talking about what's winning elections in ridiculous places like New York City, where they talk about the government is going to come in and help with affordability. All three of us know that is not something that can happen. Right. But now they've sort of dragged President Trump into saying, no, we're doing great on affordability and we're going to do more. It's like, to me, it's cut regulations. What is the political solution from an economic lens, or is there none?
Well, I mean, the economic solution is lower home prices, let the market clear. The problem is in theory, the market should be able to clear on its own. But the mortgage rates are holding it up. So I think that's why they're proposing things like portable mortgages or 50-year mortgages or whatever. And obviously, I don't know how you make a mortgage portable.
That's what I was going to ask you. Do you have a mechanism for that? There's no
mechanism. And actually, I talked to one of my clients who's, does nothing but financials. He's a hedge fund guy and he does nothing but financials. And he was like, you can't legally, there's no way that you can say, 112 Cordova is suddenly that mortgage is now going to, whatever Barcelona. It just doesn't, you can't do that. But there are ways that they're talking about you'd be able to transfer the mortgage to the buyer. Now that might be something that kind of loosens up the market a little bit to do that, to make it,
because it's the same collateral. You're talking
the house doesn't change. You're just the owner. And, maybe they have to tweak some of the terms based on the financial situation of the respective buyer. But that would probably be easier to do than this whole portable thing. And a 50-year mortgage, I don't think that accomplishes anything whatsoever, except to burden you with debt for even longer in your lifetime. So I don't know. I mean, my answer is just, yeah, you want to get more supply. I mean, we may get what we're wishing, which is if the institutional players flush out, if there's a credit bust and they all have to liquidate all their portfolios, you could see a lot of properties get marked down very quickly. It's not a positive, but it would certainly provide some relief in the form of lower prices in certain markets.
I just want to put something up there. I don't have a question in this, but you guys can comment at will. Our friend Edward McKernan put on Twitter right now, AI bubble not, and he's obviously pointing to the rally in NVIDIA. Now, Luis, you can take that off. We can see we're the relevant people here, Ed, Jim, and myself on the right-hand side of the screen. But I just want to say to Ed, and I want you guys to comment as well. Luis, you can, well, actually, I can remove it.
By the way, Steph, Ed is our pal. He's really, really smart in ways of tech. I mean, he's, not one of these. I mean, he's a smart guy, so he's coming against us in that. By the way, did we lose Bobby? That's finally a dream come true. So I will comment.
Oh my God, I hear him. Don't you hear him? Oh my God, that's too.
Ed, I believe that again. I'm not saying that the bubble is about to burst. I've been saying that it's in the early stages of bubble creation. I've also been saying that if NVIDIA did not hold gains and started heading precipitously lower, it could be an indication of deflation time, maybe not busting time. Bobby?
I just wanted to say this because I know Ed's still watching, and instead of deleting the screen, I deleted myself. So
which we appreciate.
Showing my age on the screen. Yeah, showing my age is my favorite thing to do on this show. No, I just wanted to say that a stock going up does not prove it's not in a bubble. As a matter of fact, it's sort of the opposite.
Exactly.
So the stock continuing to go up without necessarily the valuation that justifies that actually is part of the reason it could be a bubble. Doesn't mean it is.
I'm so glad you said that. I listened to a dissertation by Charles Payne, who I love, yesterday, with some guy on, and he was saying, all these people who have been talking about how overvalued certain stocks are, well, they've missed it. Because if they were overvalued a year ago and the price just keeps going up, so they're not overvalued. And I was like, no, that's not.
It's like saying houses get more affordable when the price goes up.
Right.
By the way, it's interesting because from an investment thesis, I think we've eliminated banks, and I agree with you. Normally, in a time where I think the Fed's going to boost up their balance sheet and M2 is going to go through the roof, is that real estate would be something to own. But real estate might be a little tainted as well. So basically, we're just landing the needle on precious metals. Correct.
I got one other thing for you, and
good.
This is my new favorite, and it really fits into the NVIDIA story because nobody's talking about. Well, I mean, some people are talking about energy. But if you're bullish on AI and you think it's the internet of this cycle, which I believe it is, it's just there are a lot of companies that may not exist in a few years, but I think AI is here to stay. It's only as good as the energy required to power it, and we're precious short on that energy. And the producers of it, their stocks are so cheap. and especially cheap relative to the AI stocks that they're supposed to support someday. So that is an intellectual disconnect that I just for the life of me can't get my head around. Like, why is it that all these people are rushing into these massively valued, whether you become overvalued, but they're extremely expensive, whether it's a bubble or not, AI stocks, but they have no love for the energy companies.
What are the couple names that you've been looking at? Is it all when you say energy? What kind of energy?
Well, I'm just all in on every form of it. We need it all, so
Nuclear,
I'm just
nat gas. Yeah,
right. Absolutely. Yeah. Nuclear and natural gas, electricity, all of it. You need everything. So
what's the best coal play? Do you have any?
Absolutely no idea. No.
Bobby, do you know anything if you think what tracks coal? Is there companies that I've never made that?
No, I've never looked at it.
If someone knows,
this is one of the areas where Jim and I had a disagreement within our larger agreement, where we both think that gold kind of needs a rest. And Jimmy's been hedging it, and I have not, to Jimmy's profitability lately. But I'm just keeping it, and I'm thinking about adding more. And part of it is because of what I see going on in the equity markets. I'll make a wager, a very small wager, like maybe a British pound. To anyone, I think Nvidia will be negative versus yesterday's close by the end of the week, despite what happened today, because the pressure.
People who got to get out, right?
What's that?
There's people who prepped for this and now want to get out on, and then we'll head to this. We've seen it a million times. The sell-off
we've seen in gold almost directly coincides with the probability of a December rate cut dropping. The rate cut went from around 96% on October 13th. It was 50% today. And then after they announced that they were going to delay the October non-farm payrolls data, it was not going to come out in the originally announced time. It went back down. And then, of course, the FOMC showed division on the rate. I think they'll get right back on that rate cut train pretty quickly, because if there wasn't weakness in the labor market before, with the shutdown, there'll at least be weakness in consumer spending. Now, here's the reason I think that, and you can both scream at me if I'm wrong. People are going to get their back pay, but you can't buy the steak you didn't buy a couple days ago. Right. You can't go out to the dinner that you missed because you weren't getting paid. Those things, you can't make that up. You don't go out twice. So am I making too much of it, Steph?
No, I mean, I think that's, in terms of you're talking about the end of the government shutdown or the Fed?
Yeah, what the government shutdown temporarily took from the economy. And I think the Fed will have to come back into the easing cycle. Oh,
yeah, I absolutely agree. I think the Fed will definitely have to come back in. And I think that they will probably panic if they don't cut at this meeting. And, I think the economic data and the market, the continued problems in the credit area will convince them that, whoops, we should have cut. And therefore, they'll probably be even more aggressive at the next meeting. And therefore, they'll have some panic cut. But I think, as relates to the government shutdown and the impact of that, that I'm much more focused on the impact of the one big beautiful bill, which is going to hit in the early part of next year and is very positive. So if we can make it somehow between here and, March of next year, when people get massive tax refunds and all their, withholding is adjusted and their incomes really see an increase, then we're in a different ballgame. But, that's a long way between now and then.
By the way, do you guys have AMD and Micron up on your screens too? Did you see the move almost equal moves to NVIDIA up in the aftermarket too? 3% up for each of those, if I read it right.
You guys know the Kobayashi letter?
Yeah, sure.
Yes.
He just released something 6 seconds ago. He said, this kind of rhetoric is unheard of in an earnings release. NVIDIA founder Jensen Huang said that sales are off the charts and GPUs are sold out. He also adds AI is going everywhere, doing everything all at once, all in the press release, not on the earnings call. Strange stuff is happening with this particular stock.
Yeah, it's weird. It's weird. We have not heard rhetoric like that before, ever. That is quite amazing to me. Someone just said, because normally in the earnings call, they try to, to temper expectations a little bit and then try to beat the shit out of earnings when they come around again.
Right.
I'm just amazed by this. But so here's I'm changing what I'm looking at. I've told people for a week that I'm just looking at NVIDIA. If it goes up and then it turns tail. But I'm throwing AMD and Micron too. Who are the chip makers, even the tier 2 Kirkland brand? Do you know? Bobby, who do you got?
You could look at Broadcom. It's not a chip maker.
Broadcom, but it's involved, kind of.
Yeah, it's involved. It's not a chip maker in the true sense of it, but it's also up. Let me measure what the aftermarket is up from its settlement. It's up about 2% right now.
Yeah.
So you're looking at the whole space. I mean, the Nasdaq was up about 0.4% when the news came out. The futures are now up about 1.35%. And this is kind of what I mean. When you have this kind of a move, I'd like to see the NASDAQ quite a bit higher than that, to be honest. And it still is not, it doesn't look to me like it's going to get back above its 50-day moving average, at least at this point. So the futures are where you see this stuff. I've said that for years. The futures are where you see the actual movement because the hedges are included in the trading, right? And that's where the hedges and the speculators are. So it balances out to me better than the actual indexes do.
Did you guys have a reaction to Michael Burry and his
he's correctly predicted 50 out of the last 2 bubbles, right? And again, he in The Big Short and what he did was amazing, and the math behind it was amazing. But he's also told us a million times that the bottom's falling out. So I don't. Should I listen to him more? What do you think?
No. I thought it was interesting that he, is basically shuttered the fund or
Yeah, he said, if you guys want to play, you guys play, but this is too expensive game, right?
Yeah.
Steph, do you have any other topic you want to hit before we goodbye him?
No, I'm so distracted because my bulldog now has her favorite ball out and she's starting to play with it in the background. So
is there a way we can get the bulldog on the show?
Can we get her on your lap? Can you pull her up? Can I see her? I want to say hi.
God, I don't know, but she's busy destroying the ball right now.
What's her name again?
Wilhelmina.
Oh, yes, I remember. We just adopted another dog, because we're rescuing. Listen, I got into the whole rescue thing because they were free.
That's awesome.
But this dog had been living out on the street in Texas for a long time, and they took her from a kill shelter. And she's been with us for like 5 months now. It's so funny. She walks around the house going, "This is my house. This is my house too." It's like Eddie Murphy in Trading Places. "This is my house," right? And I can just take this, right?
Right. And she puts all the stuff in her pockets.
Exactly right. She walks around the backyard. "I'm in my yard back here, my yard." It's really funny. So it's kind of a pain in the ass. But she also my wife named her Charlie. So every time I talk to her, I'm always like doing, "It was you, Charlie. I could have taken Wilson apart." But nobody knows what I'm talking about because that movie's way too long ago. Anyway, where can they find you, Steph?
At macromavens.com or on Twitter at @spomboy, or maybe once in occasion with you guys.
That's fantastic. By the way, Wilhelmina just walked through the back as you were talking, which I love. Pushing the ball with her nose. Yeah.
She checks it like a hockey player, she just slams into it.
Exactly. Anyway, thank you guys so much for joining us in the show. You guys know it's my favorite because of the live element to it. All the contributions you guys give are amazing. We are so lucky to have I can't even call them fans. Like, we're fans of you guys watching as much as you're fans of us. But thank you guys for being there. This has been the Trader's Edge. Also, please join us at unfilteredinvestor.com. Bobby and Mike Arnold, their technical analysis is nothing short of amazing for the last 6 months. I'm Jim Iuorio. That's Bobby Iaccino. This is the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.